Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Mr. Tulsian is also with us. Mr. Tulsian, your thoughts? Definitely it's a preferential offer from what Mr. Garg said, and it is 51%, so probably some 200 crore more shares, new shares, would most likely be issued to LIC. There was some ambiguity on open offer. You heard the DEA secretary. Your thoughts?
See, Lata, firstly, this preferential offer was very much expected because we all know that the bank needs fund and it won't be sale by the government, to the IDBI. So that was known, number one. Number two, good to know that LIC will now eventually be holding 51% stake, and I have been hearing that. Now, if you really take a call that if you see the broad contours, maybe 35,000, 36,000 crore market cap of eventually of the enlarged capital, and if LIC is holding maybe on a relative basis, one may argue that it is 51%. But if you see the absolute number, they are already holding the more than that stake in Axis Bank by virtue of their 15% stake, sub 15% stake, which is valued at about 19-20,000 crores. So I don't think that, I have always said that I don't see any problem in seeing LIC acquiring the stake, and I agree with your analysis which you have been saying. In fact, this will be a migration from the LIC to the private sector eventually, because even no regulators will allow them to hold it beyond a certain time frame which they ultimately LIC has to spell out. So I think this is a good move, and I don't see any reason now for this one. But coming on the open offer, I don't know whether this will really be setting a good precedent, that because the float is low, eventually maybe the government will hold, if I take off the enhanced equity, maybe government will hold about 40-45%, 51%, because right now if you take combined holding of both the LIC and government, it is about 92%, and if the enlarged equity, it may be about 93, 94, or maybe 95%. So whether this will be a right precedent in saying, because the float is about 5-6%, one should escape the open offer. And second point I just want to add here, because if you know that August 2018 is seen to be the approaching deadline for for all the companies to bring down their stake to 75% as well. And as such, the government, that is PSUs, because there are many PSUs who are holding 90%, 89%, and the absolute amount which government needs to divest is about 32,000 crore. So maybe if I presume that this will also probably comply here, but this precedent may not go well with the market. I don't know about SEBI, what will be the view of the SEBI, whether the exemption will be given or not. But if the open offer doesn't come, then the sweetener will go away. I don't think the share can rule above 50 rupees. But if you are a long-term investor and if you are taking a prudent call of LIC coming in, that's probably the right way. Just to give an example, take for instance LIC Housing. That company has been doing quite well. If somebody, if they wants to divest their stake, they can definitely, fetch a much better price than what the share price is now ruling at. So let's hope that maybe in the couple of years, eventually, LIC may be able to turn around the IDBI. I'm not worried for the gross NP of 26-27%, because that will come down as such maybe to sub 20% in the next 6 months by virtue of the NCLT settlements and all those sort of things. So all these things are looking up, blotted up now, but I think in the next 6 months things will change substantially. But if open offer doesn't come, I think that will be an unusual precedent we're getting set in, and that will add, that will take away the sweetener of maybe 5, 6, 7, 8 rupees from the share price.